During the weekend, Bitcoin saw another nasty dump, this time all the way down to $31,000. This is an important piece of information that changes the technical landscape by quite a lot. Where exactly does then Bitcoin stand, and what are the critical short-term levels to look out for? Once Bitcoin reached our initial target zone of $42,000 to $45,000, it immediately began taking another route. These new price developments are always difficult as they tend to give us mixed signals. This makes them hard to figure out initially, but the more data we get and the more we wrap our heads around proper analysis, the more we can circle in on where it's at and where it's heading. As always, proper technical analysis is something that evolves from hours on end of solving the jigsaw puzzle, and the more pieces we find and the more little clues we're given, the more accurately we're able to lay the full picture. In this episode, we'll go through time frame for time frame to determine the critical points ahead. But first, and as always, yada yada yada
and yada yada yada
yada yada yada
and yada yada yada.
Not financial advice. I am not a financial advisor. And for more on this disclaimer, please see the written one at the very beginning. And yeah, please like and subscribe if you appreciate our work on this channel. First of all, and to be perfectly clear, I am very bullish on Bitcoin and altcoins over the upcoming few months to half a year. The targets that I presented still stand more than ever, and for more on those, please watch them in full in this episode. And while we're at it, to those of you who find these crypto times to be particularly stressful, I strongly advise you to watch this short episode which I produced solely for times like these. With that said, Bitcoin and friends do not look very enticing in the short term, as in over the upcoming few days or few weeks. And as we're here to make the most of the odds we're able to identify, there will be alterations in my holdings, either in the shape of reallocations or simply by releasing certain positions when the clouds look dark. Now, starting off on the weekly chart, Bitcoin managed to close above the EMA 50 and the MA 40 and 50. However, some technicians correctly argue that Bitcoin breached the 21 moving average and closed below it for the first time ever during a markup. This argument certainly holds validity as it's been frequently tested throughout each steady bull run. This is something I advocate you to keep in mind as it taints whatever bullishness that may arise in the short term. In fact, it is the very basic principle, the lens through which we should approach the crypto market until proven otherwise. With that said, Bitcoin did start the week off rather strongly on Monday. This on its own is nothing remarkable at all, as most candles, regardless of their time frame, ultimately contain wicks in either direction. If Bitcoin were to continue down, a deceitful little lure the optimist move like this would most definitely be expected. On Monday, Bitcoin peaked at 40,000 due to Fat Finger Musk being at it again. Someone asked me on Twitter whether I thought this would pump the price, upon which I answered that sure, but only in the very short term. Now, half a day later, Bitcoin is back at the pre-Elon levels again. But how then do we know whether this here was an actual reversal, that Bitcoin's bottomed out at 30,000 sharp? Well, if or when Bitcoin manages to overcome some key resistance levels, we may with a high probability conclude that the worst is over.
Well, I brought you down safe and sound.
But until then, the roaring bears are still in charge, and we should not be fooled by this seemingly strong start of the week. And the reason for this is rather simple and something we've gone through in recent episodes. Upon any mini market cycle capitulation like this one, the market is overwhelmed with bad emotions. It's toppled with fear, despair, and overall doom and gloom. And just like it's hard to fathom the price ever going down again when trading at an all-time high, the same goes for when the market pulls the plug and the price drops like a stone. In that moment, it is difficult for our minds to psychologically understand that there will be sunshine again. For that reason, despite the market being volatile in its temper, don't expect it to swap to optimistic and happy-go-lucky without some process in between. And that process typically involves some passing of time to calm down that collective hyperventilation. I therefore expect Bitcoin and altcoins to be volatile over the upcoming few weeks before a balance and consensus has been reached between the buyers and the sellers. And depending on how things evolve, as in what the price does, what type of formations it creates, we can safely expect different outcomes based on whatever way it chooses. With that said, we do wise in not excluding scenarios in which Bitcoin could drop as low as to the mid-20,000s. This, however, entirely comes down to the price development, for it's unlikely to drop down without proper technical warnings first. Let's now look at the charts one by one to distinguish what resistances Bitcoin must overcome before we can draw a sigh of relief. The 1-hour chart started off the week by looking pretty good, although do remember that we would anticipate a fake move to the upside even if this week's candle were to close in the red. On Monday, the 1-hour chart broke above the EMA ribbons and Ichimoku. These have both acted as reliable supports and resistances whenever Bitcoin's been trading on this time frame. It also managed to break above the descending channel. The RSI did finally show some signs of life, for until yesterday it just couldn't break above the upper bearish blue and has rather stayed within that soul-killing bearish blue channel all the way back since $58,000. Yesterday, it at least showed tendencies of coming back from the dead. But since then, the hourly RSI dove below the upper bearish blue and again tested it from below. This tells us there's a high chance of a near-term downside. There is a strong horizontal resistance at $42,000 to $42,500 that must be overcome before this 1-hour chart has properly turned this sinking ship around for us. And that level just so happens to coincide with a pivot top, the new all-time high from early January. This makes that resistance extra strong. It is also important to note that if Bitcoin were to hover around in the 30k range for enough time, it will automatically establish new levels of support and resistance that it will then have to overcome as well. And do keep in mind too that the hourly merely gives us indications of the immediate future. Just because it were to turn bullish for now, it doesn't mean Bitcoin's back to healthy and strong. It could just still be a minor move within a bigger time frame, a correctional move before stronger bearish dumps. Just like on the 1 hour, Bitcoin managed to break above the EMA ribbons and the rather humble red Kumo on the 2-hour chart. However, it has now dropped right back under the ribbons again, and this green Kumo support, on which is depending on upon producing this episode, is weak at best. If it were to break below, then it will have a 2-day long well-fed red Kumo above it as resistance. The sudden bearishness is also supported by an upper bearish blue RSI closing. In this sense, expect no fireworks over the upcoming few days, at least not until it were to cancel that signal by breaking above it. Don't be fooled by short-term rallies like that of yesterday. Bitcoin still has a long way to go and it's got a lot to prove before we can draw that sigh of relief. With that said, once Bitcoin has inflicted enough pain, either in price or time, or both, it can and likely will move up fast, thus completely ignoring any overhead resistances. This is the big one and my main cause of concern. The EMA ribbons are widespread, which to those of you who may not know amount to stronger resistance. For the more widespread they are, the more difficult they are to overcome. Period. This little fan of resistance strings equally coincides with a big fat red Ichimoku Kumo. I do not expect Bitcoin to push above these without a fight. If, on the other hand, Bitcoin were to find a way to come out safely on the other side and stay there, and given that it also breaks and stays above the $42,000 to $42,500 resistance zone, that'd be just the bullish thumbs up that we're looking for, at least based on how the technicals interact for now. However, if it were to break above but then fall right back below again, it tells us that Bitcoin is trading within some sort of a sideways range, as in a pause movement. For in such case, the dangers are just as present as they are now. But let's not jump the gun, let's rather focus on the immediate dangers ahead. And those dangers alone speak loudly in favor of immediate downside to follow. We are likely looking at a potential formation creation as we speak. The worst of those would be a descending triangle, which would strongly increase the risk of a plunge down to the low to mid $20,000 range. Beware and keep your eyes on the chart. But that's not the end of it. This type of price action right here, whose volatility was spewed on by the nasty wick on Sunday, tells me we're by no stretch ready to move up just yet. Long wicks like these and at massive trading volumes rarely come with round the corner reversals. These rather add to my thesis of some volatile crypto movements ahead. Given what we know at the moment, as in the technical data currently available, we need more pain, either in the shape of price action or time. After Elon's tweet, Bitcoin got rejected at the 786 fib. This further supports our thesis of unpleasantries ahead, or at least it tells us to be prepared to kill some time in the waiting room. For to those of you who have superb memories and good attention to detail, this fib level is a textbook clue of a formation creation in the making. As with the other timeframes, Bitcoin's 4-hour chart needs to overcome the $42,000 to $42,500 level and stay above it, which conveniently would also take it back above the EMA 200 on the daily before we can begin plotting for a continued markup. Bitcoin is facing some serious resistances, and that fear and despair from last week will likely not just vanish into thin air without some duly needed processing in between. I suspect this little mini rally stands a good chance of turning into a weekly wick. My only advice right now is to tread carefully. I did announce on Twitter when I released my Cardano and Bitcoin positions due to their imminent technical weakness. And due to the current volatility, I will look to seize the moment by rearranging my portfolio to fit the up and down moves. I will also consider releasing parts of my holdings temporarily to buy back again at generous discounts. For if I can save 10, 20 or even 30% on selling now and fishing it back soon thereafter, it is worth just as much as a 10 to 40% gain from a long position. Yes, you heard me, 10 to 40. Do the math, it works out. For just like in poker, whatever money you can save from making a good laydown is worth just as much as the money you win. And after all, we are here to exploit the strengths and weaknesses of the markets, for it's the entire point of trading and technical analysis to begin with. Not acting upon them would be a professional sin. That was all for now. Thank you and goodbye.